Well, good afternoon. Mark Milam here, your mortgage professional, coming to you on August the 14th, just coming up on 1 o'clock Eastern Time. Coming to you with this week's market summary and interest rate update. Well, let's talk about this week because 2020 just keeps on giving. 2020 is the year where seemingly everything and anything can happen, and this was no exception this week, especially in the world of mortgage lending. And what I'm talking about specifically is the Federal Housing Finance Agency's announcement on Wednesday afternoon of what can only be described as a tax or a cash grab on mortgage lenders. What did they do? Well, they announced without any prep, without any forewarning, that all refinance transactions that are going to be sold to Fannie Mae and Freddie Mac now have a 0.5% adverse market fee on them. That's what they call it, an adverse market fee. What does that mean? That means if you have a $400,000 mortgage and you're looking to refinance that into a lower rate, get yourself into a better situation, well, that refinance just got $2,000 more expensive, 0.5% of the loan balance. That's what lenders are getting hit with. Here's another crazy thing about it. This goes into effect for transactions for loans that are sold to Fannie Mae and Freddie Mac after September 1st, which is a lot of loans that are already in process. The typical turn time right now to get a refinance closed is somewhere between 45 to 60 days. So you're talking about a lot of loans that have already been locked that are going to be subject to this 0.5% tax. And there's no way lenders can pass that on, nor should they, to the client, to the borrower. So lenders are just going to be stuck with this bill. And when you add up all the lenders around the United States and the incredible amount of volume that these lenders have been processing, well, you are talking about tens of millions of dollars in unexpected expenses that are coming out of lenders' pockets and going to the federal government. Why? So why the tax? Why the tax? The tax, according to the federal government, is due to market uncertainty and potential adverse conditions. Which is curious because we've had market uncertainty now since late February, early March when the pandemic hit. If anything, we've got more clarity now than we did then. And if it's really about market uncertainty, why just refinances? Why aren't purchases receiving the same tax? Very curious move, very difficult to understand, has elicited an enormous response from the Mortgage Bankers Association, which is urging all of its members, lenders nationwide, to reach out to their congressman, congresswoman, to try to lobby for the removal or the reversal of this announcement. Now, the announcement came out Wednesday afternoon. Guess when it went into effect? Thursday morning, leaving lenders no time to adjust rate sheets, to reformat purchases versus refinances, to prepare their investors or their stockholders or their board of directors for a potentially extremely negative economic event. Now, as I said, lenders, including the lender I work for, we're going to absorb this fee for all loans in process, but obviously they can't do that moving forward. So for homeowners who haven't yet taken advantage of refinances and are looking to in the coming weeks, in the coming months, boy, they're going to be subject to a more expensive refinance thanks to the federal government. And is this really what we want the federal government doing to its citizens in the middle of a pandemic, just making refinances more expensive for a seemingly odd reason? Let's look at some headlines here. So if you look at Mortgage News Daily, this is what they published here on August the 12th. The Federal Housing Finance Agency, which is the regulator for Fannie Mae, Freddie Mac, drops a bomb. Your refi just got much more expensive. Great article here by Matthew Graham. If you look over on Housing Wire, new fee on mortgage refinances could cost homeowners $1,400. Fannie Mae and Freddie Mac cite higher risk amid economic uncertainty. So higher risk just for refinances only, and we didn't have the higher risk before. So curious move. Now, all that being said, if you're looking to purchase a home this fall, late this summer, boy, you're still in fantastic territory, and none of this nonsense impacts you. You're still going to be looking at rates on the 30-year fixed in the mid twos, and the 15-year fixed down in the low twos. Incredible territory that we're in. And if you're refinancing, yes, this 0.5 point is an extreme bummer, but you are still finding yourself winning incredible all-time lows for interest rates. So it's still a wonderful time to take advantage of what's happening in the market. It's just a curious move by the regulator of the GSEs. So it's something that we'll have to watch as we move forward. It's something that we're all hoping the Mortgage Bankers Association has some success in getting repealed or revoked. Until then, if you have any questions, please don't hesitate to reach out. Mark.Milam@northpoint.com. Thanks.